Hello and welcome into the KE Report. Shad and Corey here, getting an update on Guanajuato Silver, traded on the TSXV under the ticker GSVR and on the OTCQX under the ticker GSVRF. And we're joined today with the CEO of Guanajuato Silver, James Anderson. And James, we just talked a couple weeks ago about all of the different equipment that you were putting in place to optimize mines, your mine optimization strategy. We talked a little bit about Mexico. But now we got numbers to talk about from Q2 financials, and we've had a lot of questions come in. I guess just to start us off, give us some of the key metrics from the Q2 financials, how it compares to Q1, and then forward-looking statements on how you think things are shaking out for Q3 and Q4.
Sure. Okay. Thanks, gentlemen. There's a lot of things to talk on there. One of the things that we highlighted in our news releases for Q2 was record revenue. Right. We report in US dollars. We had $20.5 million in revenue for the quarter. The nearest quarter was the previous quarter to that, which is 17.7. So we continue to drive up revenue. A lot of that had to do with the incremental increases in our metals prices. And, that certainly is a direction that we want to continue. If you go back to Q3 of 2023, we go 15.6, 16.5, 17.7, and 20.5 million US dollars. So quarter over quarter revenue increases all the way through that.
So, James, let's talk about, first of all, positive mine operating income for the first time in the company's history, just under $1 million. And also cash costs then, and all-in sustaining costs. All-in sustaining costs seems to be a big focus for investors. That came in at $25.55. It said that it was slightly higher that quarter over quarter due to sustaining capital of just under $2 million spent in Q2. Take us through how you can go about controlling this all-in sustaining cost, even bringing it lower for the balance of the year and into next year.
Gotcha. Yeah, so couple of different things that you mentioned there, Corey. Let me just comment briefly on the first one, which is mine operating income for the first time. We are a young company. We really only started mining in 2021. We now have 4 mines, and if you add in Pinguico and Horcon, where we are deriving some mineralized material for processing, maybe it's 6 mines. So we've got a lot of different things going on, and we've built the company very swiftly. To see that change in terms of profitability at the mine level, that's very, very important for us, and we hope and expect and demand that will continue, that progress will continue into the future. Regarding all-in sustaining cost, I do have to point out, there's a lot of people just overlook this. It's not an IFRS measure, and therefore every mining company under the sun puts all-in sustaining costs together differently for accounting purposes. So we try and have a balanced approach and be fair in our determination of what all-in sustaining costs actually is. Your point about, okay, the extra couple $1 million in CapEx, well, that's very important. That adds $2.38 to the all-in sustaining cost in this last quarter. Moreover, we produced less silver equivalent ounces in the quarter, and that can have a negative effect on all-in sustaining cost. Obviously, we want to be able to drive up production further and costs down going forward. And I'm very confident that you're going to see a better number, a somewhat better number in the third quarter, and a significantly better number in the fourth quarter.
Well, and James, let's even dive into it a little bit further. We talked last time extensively about all of the sustaining capital that you spent on new equipment, the filter presses for the lead and zinc concentrates that'll help with recoveries, the ore sorting equipment, some of the other optimization you were doing at multiple mines, that factored into that all-in sustaining cost. But also there's a currency exchange factor. A lot of people have questions about how the Mexican peso factors in, since that's such a big part of labor and how you pay costs. How will that affect things moving forward?
Okay, well, let's talk about the peso first, Shad. For the last 2.5 years, the Mexican peso has gotten stronger and stronger and stronger. It really was one of the strongest currencies on the planet. That was not good for us. 60% of our costs are denominated in pesos. We pay all of our electricity to the Mexican electrical grid in pesos. All of our labor is denominated in pesos. We pay pesos to our 1,000 workers in Mexico. However, in the wake of the results of the Mexican election, in the first couple of days in June, the Mexican peso has reversed and it has gotten weaker and weaker and weaker, significantly so. It's lost close to 20% of its value against the US dollar in that time. That's really good for business. It's not something that you saw at all in our Q2 financials, but for June, July, and August, that gets better and better and better for us. So I'm expecting that to have a particularly positive effect for us in the next reporting quarters.
So, James, in terms of the next reporting quarters, then, any major costs that the company needs to undertake to continue production, even if it stays right around what was reported last quarter, above 800,000 ounces silver equivalent?
No, I think a lot of that is sunk cost here at this point. Ore sorter, filter presses, additional dewatering at Cubo, all of that is beginning to have a positive effect on our mining operations.
Well, and James, a lot of people had questions about growth. You have dubbed yourselves as one of the fastest growing silver producers in Mexico, and you have been. If you look at since 2021 when you started through present, it's been a big growth initiative. But you know how investors are, James, they want to see where's the growth coming from. So maybe speak to how some of this optimization will help with growth, but also people had questions. We can tie this in with the third party ore that you were processing in Q1. I know you took a pause in Q2, but do you think that you'll see more of that as we round out the year and move into next year?
Okay, well, let me try and answer the second question first. We did process a significant amount of third-party ore in Q1. A lot of that is at Topia, but in Q1, there was a big percentage of production that we got from third-party material in the first quarter. That, as you point out, was curtailed dramatically in the second quarter. The large company that we were doing that for tells us that they would like to restart that again. We certainly would. I think it works very well for both parties. The large company moves slowly, like large companies do, and so we hope to be able to re-engage with that in the quarters ahead. But I can't say with any definitiveness that we have a specific date for that continued expansion. If you look at growth generally throughout all of our mines, we have reason to believe that we can grow production significantly, from just about everywhere. Topia, the new filter presses that we are installing right now, they will have a great positive effect. The bottleneck at Topia is the plant. And we can expand production if we get the plant able to process more on a daily basis. These new filter presses go a long, long way to be able to do that. Like most things in industry, it usually takes a little bit longer and a little bit more money than you think going in. However, those filter presses should be fully operational by the end of September. Likewise, our ore sorter at San Ignacio, it will drive costs lower and it will drive production higher from areas with either underground at San Ignacio or with that big waste stockpile that's been there for years and years, to be able to take ore from that and deliver it to the Cata plant and or the Cubo plant within Guanajuato. Cubo is where we have more production capacity. So that will drive, again, production higher, costs lower. We had an unexpected 40-day wait to get that large piece of machinery through customs from China and at the border at the port of Manzanillo. But that's behind us, and I fully expect that starting in October, we will have that piece of machinery operating at full capacity, and that will help us a great deal.
So let's talk about this corporate strategy then, or that headline. Mexico's fastest growing silver producer. Is the focus of the company shifting a little bit now to maybe not growing overall ounces as quickly as you did through 2022, but now focusing a bit more on revenue and also income, earnings in that sense, to keep costs maintained while realizing a higher silver price?
100%. And I know you want to talk about, some personnel changes that we've had recently. A lot of the personnel changes, they're decisions made because our company needs to focus on profitability as well as simply production increases. We need to do both. We're not big enough yet. There's room for growth within the Guanajuato area and within central Mexico, especially at a time when many people are shying away from Mexican expansion. So we need to be able to grow organically from all of our assets. There are other opportunities for growth within the Guanajuato area. And while we're doing that, we must necessarily have an eye on costs, on grade control, to be disciplined. These are small mines, they're older mines, and we need to be able to be very vigilant about cost controls, and you will see that reflected in future quarters.
Well, James, let's get into the personnel changes, because as a growing company focused on results, you've made some changes. A lot of people had questions about it. Why don't you unpack some of the key people that you brought on to help the team expand?
The key person who is our chief operating officer and has been running the operations since January is Carlos Silva. And Carlos has a tremendous winning record, an entrepreneurial record, having started his own mine at Zimapan in Hidalgo, where he's from originally. He took that mine, he leased that mine from Peñoles and financed it using Trafigura money to be able to make a very successful mining operation out of it, and vended that mine into a Canadian public company, where he then took the reins as chief operating officer and then as CEO. And when he started off, that operation was producing about 1 million silver equivalent ounces per year. Today, it's producing over 20. That growth doesn't happen just by accident. And Carlos shares my desire to grow production, but with a keen eye on profitability and discipline. And that's the guy we need to run our operations.
So, James, you did also lose Dorado and Hernan Dorado to retirement, but now that you've added the VP of operations here, do you need to build the team anymore from its current state?
No, I don't believe we do. As we went through that very rapid growth phase, the people who you mentioned a second ago, they were extraordinarily helpful and a huge part of the growth phase of the company to get us to where we are. We need a slightly different discipline and entrepreneurial spirit to be able to drive the next phase of growth and profitability for the company.
Well, James, let's just wrap up with that. The next phase of growth and profitability for the company, looking forward with the changes in the currency exchange rate, with some of the optimization of the equipment you put in place, hopefully bringing the costs down and the efficiencies up. How is Guanajuato positioned for Q3, Q4, and growing into the future?
Well, I think, again, perhaps not quarter over quarter, as one of you mentioned earlier in today's talk, people want instant gratification. It's very rare that you can get that in the junior mining business. If you take one step back and look at our revenue growth, look at our mine production growth, look at where we're deriving mineral from, we have been growing the company swiftly all the way through this. We will continue to do that organically from the mines that we own today, and potentially at least from bolt-on, easily applied expansion within the Guanajuato area. So I think that that's really important. One of the other things that I would just like to touch on, which we haven't just yet, in the last quarter, we did announce that we had paid off in full one of our loans to Ocean Partners. You will see a keen eye from the company in the weeks and months ahead about reducing our overall debt. 2023 was not easy on most mining companies. I think we took on a little bit more debt than we would have wanted. We are reversing that swiftly right now, and you'll see more news to that point in the months ahead.
All right. Well, we'll wrap it up there for today, James. But thanks for breaking down the Q2 financials, kind of looking forward into the quarters to come. Some of the work the company has done to not just right-size the optimization, but also paying down that debt and invest in the future. And if people following along want to look at the news as it hits the wires, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section, so you too can follow along with the news as it hits the markets. And James, keep us posted. We'll get you back on for an update, and looking forward to our next conversation.
Fantastic, gentlemen. Thank you so much for the opportunity.